Hi, this is Jack Crooks from Money and Markets TV. This is a season of giving, and central banks are really getting in the holiday spirit. They've spent the month of December trying to prop up the financial industry and the markets with one easy money plan after another. First, there was $50 billion in renewed currency swap lines. This plan called for the Federal Reserve to lend dollars to the European Central Bank in return for euros. That gave the Eurozone a pressure release valve for funding the markets. And since the Fed didn't lend to banks directly, the risk for the U.S. is virtually non-existent. Then last week, the European Central Bank provided nearly 500 billion euros in 3-year cut-price loans to hundreds of Eurozone banks. It was a much bigger funding operation than analysts had predicted, and officially, the most money pumping the ECB has ever done. The general consensus is that the banks are being encouraged to use the money to buy the sovereign debt of peripheral Eurozone countries. So what's next? Well, many Fed watchers are betting on a third round of quantitative easing. And others worry that the Fed may try to bail out Europe more directly than through the recent swap arrangements. One of the most likely scenarios envisions Ben Bernanke and company buying up mortgage-backed securities. This type of program could be sold as a way to prop up the struggling U.S. housing market, which the public would be more likely to go along with than another round of bank bailouts or additional stimulus. But it's also possible that the next major effort to boost the global economy will come not from any individual central bank, but from the International Monetary Fund. IMF Director Christine Lagarde recently said that no country in the world will be immune to the debt crisis now sweeping Europe. And she insisted that the problems facing the global economy can only be solved by a global effort. Of course, the IMF can't do anything without the approval and the leadership of the United States. And in today's political climate, there's no chance that the Congress will approve any bilateral loan to the IMF. In other words, the IMF is just kicking the can down the road, while Eurozone countries try to navigate ratings downgrades, lackluster bond auctions, uncomfortably high lending rates, national austerity, agreement on fiscal cohesion, and bailout fundraising. Ultimately, a collapse of the global financial system may become unavoidable. I'm Jack Crooks for Money and Markets TV. Thanks for watching, and have a very happy New Year.